We were not expecting earnings from Nvidia for another 2 weeks, but the company pre-announced their Q2 earnings before the bell today, and they are incredibly weak. We'll come over here and look at the different business segments that Nvidia operates under and see how not only quarter over quarter, but year over year, we're starting to see weakness. We'll see the overall results that Nvidia announced. We'll compare that to some of the results that we had in the past. We have to look at the analyst estimates for the upcoming quarters. We'll discuss if it's likely that these earnings estimates will likely come in as well. And then we'll look at this from a technical perspective. As you can imagine, when the stock is going down 8% during the regular trade, it creates a different technical setup in the shorter term. What is going on, investors? Hopefully you guys are doing well out there. I knew I was going to get on here and do earnings videos. I sure as heck didn't think we were going to cover Nvidia this morning. Look, over the last year, down 15%. That includes a drop of over $15 per share, or about 8% during the regular trade, as this stock is reeling after pre-announcing their weak Q2 numbers, which are quite frankly Intel-like, both on the shock and also the awe of the declines that we're seeing over at Nvidia. Now, several months ago during Q1, like most companies, we got Q2 outlook or Q2 guidance from Nvidia. At the time, we're talking about just a couple of months ago, revenue for Nvidia in the most recent quarter that they just pre-announced today, the company was expecting about $8.1 billion plus or minus about 2% on that. We got news from Nvidia today that revenue is actually expected to come closer to $6.7 billion and not the $8.1 billion guidance that Nvidia gave us just a couple of months ago. Now, when we come over here to Wall Street estimates, it lines up with what Wall Street was expecting as well. Essentially, Wall Street settled on that $8.1 billion worth of revenue for Nvidia. On the high end, out of 35 analysts, the high end was $8.2 billion. The low end was $7.88 billion. And I'll remind you that Nvidia is saying that they're going to do $6.7 billion. That is Intel-like disappointment on that revenue side. But folks, it gets worse. Our gross margins over at Nvidia were expected just a couple of months ago to come in the Q2 at 65.1% on a GAAP basis. The company is now expecting those margins to come in at just 43.7% as demand and pricing on those gaming chips, which were just once flying off the shelves for double or triple retail to crypto miners and certainly gamers as well. Obviously, you've had a softening of demand for crypto mining and gaming. Almost everybody has the setup that they want, and you're seeing pricing and demand start to walk back. That is impacting the revenue side, and it is going to impact the gross margin and the profitability side as well. Operating expenses, to Nvidia's credit, to a certain degree, I guess they're going to come in line. $2.46 billion was expected. Will come just underneath that at $2.42 billion. They'll recognize some other expenses as well coming in line. Their tax rate, obviously, when your earnings shrivel up and your revenue shrivel up, well, your GAAP tax rate probably going to come down as well. Now, here's the even more shocking thing. Our gaming revenue is supposed to come in at $2.04 billion. Quarter over quarter, that is down 44%. Year over year, down 33%. I'll show that to you. So in the upcoming quarter, the Q2, which they'll fully announce still in a couple of weeks on August 24th, we'll also get a conference call from Nvidia on that day as well. They just gave us kind of a high-level pre-announcing of these numbers. The gaming revenue expected to come at $2.04 billion. Folks, last quarter, we were at $3.6 billion. Last year, on a quarterly basis, we were at $3 billion. So a dramatic, we're talking about a dramatic fall off in that business. Now, fortunately for investors, data center looks to be holding up a little bit. Q2 revenue expected to be about $3.81 billion. Last quarter on the data center, we did right about, from a rounding perspective, about $3.8 billion. Year over year, it'll be a $2.3 billion comp. So we'll be up 61% year over year, but sequentially quarter over quarter, we're starting to pump the brakes a little bit, up just 1%. Everything else with Nvidia is essentially a rounding error from a revenue perspective. Yes, this is about $800 million, but it is not going to move the needle enough to make up for our gaming declines at $2 billion, down 44% quarter over quarter. I can't emphasize how big of a drop off that is in terms of demand, and year over year as well, down 33%. That is why this stock is reacting negatively, because while more recently data center has kind of overtaken gaming to a certain degree in terms of revenue, they were very, very close. And in fact, for the longest time, gaming revenue over at Nvidia was the leading revenue generator, and now it has been cut by nearly 50% quarter over quarter and 30% year over year. That is absolutely disastrous for Nvidia. That is basically the summary of the numbers that Nvidia handed out. They basically compared Q2 results to the Q2 outlook that was given. They also gave us the summary of the different business units. Now, what you have to expect in the coming days ahead is a lot of analyst revisions on these earnings estimates. We see for Q3, which is for the quarter that we're in now, that will end for Nvidia in October, we were expecting revenues to come in at about $8.36 billion. I think when we look at the pre-announced numbers, does anybody really believe that gaming is going to be able to reaccelerate from a $2 billion business back up to the mid to low $3 billion run rate that we were on over the last couple of quarters over at Nvidia? I think not. So this $8.36 billion worth of revenue expected in Q3, I think that's going to come down. That was just 17% growth. So even if Nvidia hit their Q3 target that analysts had set, that was still, I say only, going to be 17% growth. But look, you've got a 35 forward PE on this one. That is going to come down. You still have a $475 billion market cap on this company. That is probably going to have to come down, as well as full year revenue. Full year profits are all going to have to be walked in. You have the Q4 quarter, which ends in January for Nvidia. They were expecting $8.68 billion. That was 13% growth. We were expected to slow down in Q1 to a single digit grower, just 6% revenue growth. Again, this was before the announcement that we're going to get today. Nvidia, that has a premium, very premium valuation, certainly to the rest of the market, but certainly when you compare it to like an Intel and some of these beaten down chip makers. Look, this is an astronomical valuation for this company. That absolutely is going to have to come in, as I don't think anybody, even the most bullish people of Nvidia and the chip makers in general, are not going to see this gaming revenue reaccelerate. Sure, you could have a reacceleration of crypto prices, and we've certainly seen a stabilization there as well. That certainly will help this gaming out, because you're using these gaming products that Nvidia makes in this gaming segment, but a lot of that is going to crypto mining as well. Some of that demand might come back, but this people actually using these for gaming and video games, well, it appears that that market is saturated and they've had enough. So it brings into question, after Q2 of 2024, this company was expected to reaccelerate to a 20% grower. And then certainly on this earnings side, we were expected, outside of a couple of quarters, to be a mid-20s grower on that EPS side. Certainly would have made sense when you look at this forward price to earnings. The fact that Wall Street was expecting pretty aggressive growth on that profit side, that is not going to happen anymore. In fact, we're essentially rewinding time over at Nvidia. They had $6.5 billion worth of revenue in Q2 of 2022, and now the company is expected to be there again in their fiscal year 2023, essentially a year later, coming in essentially flat year over year on that revenue side. That spells disaster for this stock. I'm seeing right now, we are recording this during the regular trade. Right now, Nvidia is down about 9%. Now, that does take it back to a stock price that we had back basically like a week or two ago. So let's not get too over dramatic. We were literally on the 170 price handle on Nvidia like on July 27th, which again is about a week ago. Now, shorter term micro trend, we were in this rapid uptrend. That is obviously completely broken down. We've theorized here on our Friday show, where we analyze Nvidia every week from a techno perspective, that this one might have just been starting a newer downtrend. I thought maybe we kind of broken out of that. It appears that this is confirmed. We are still in this downtrend. I repeat, I would not touch Nvidia with a 10-foot pole until it pulls back into our sideways consolidation box that we've had marked out with Nvidia for the longest time. Down here, this green box that you're seeing with price action between 115 up to 160. This is the area where there's some clear demand for Nvidia shares. In the shorter term, it's really bounced off these kind of 150 areas. Me personally, when I look at this now from a fundamental perspective and I'm combining it with what I'm seeing from a technical perspective, I don't think I would be that eager to jump in the minute it gets into this zone. And I think it's only a matter of days before Nvidia starts trading south of $160 per share again. I think you've got high likelihood to retest the lows that we made, again, just last month in July on this stock back here at about 140. There should be some demand, and this stock should reach some support when it gets into this 150, 140. That could set up, again, a shorter term trade where you get supply of sellers drying up at this level and this thing pops back to the upside. I would absolutely take profits in a stock like this. You still have a premium. Valuation. You're going to have earnings estimates and revenue estimates for the upcoming several quarters at Nvidia have to come in big time. So when you look at this price to earnings, it's only going to get up. When you look at the price to sales multiple, it's only going to get higher. And at the same time, your year-over-year growth is going to start to look much, much closer to an Intel and to other stocks in this sector and the stock market that don't have a high growth rate. When companies don't have high revenue growth and high earnings growth, well, look, you just simply should not pay a premium for those earnings. This looks like, to me, we have a very large shift in demand for those gaming chips, down from over $3.6 billion last quarter down to $2 billion estimate for the upcoming quarter. I don't personally think that will reaccelerate. And so Nvidia is going to be in the penalty box for the time being. There's probably some shorter term pops and drops this stock will make from a technical perspective. If you decide to play those, me personally, I would take profits and lock in my gains. And we wait for more clarity on Nvidia's earnings going forward before we buy and hold this one for the long term again. Hopefully you guys enjoyed today's video. Be back again with more today. Good luck with your investments.